In a high-profile move, President Donald Trump finalized a sweeping trade agreement with the European Union. Marked by a 15% tariff on most goods, massive energy purchase commitments, and staged handshakes in Scotland, conspicuously absent from the deal was Canada, America's largest trading partner. This omission was no oversight but a deliberate strategy. For Trump, trade negotiations prioritized political spectacle and immediate leverage over long-standing economic ties. The EU offered global headlines and multi-billion-dollar U.S. investment pledges. Canada, deeply integrated into existing U.S. supply chains, couldn't match that short-term political appeal. Despite its exclusion, Canada retains significant leverage. It supplies 4 million barrels of oil daily to the U.S., powers American homes through cross-border electricity, provides critical manufacturing inputs like lumber and auto parts. Yet these entrenched connections hinder Canada's ability to offer new concessions, making its value harder to repackage into a headline-grabbing deal. Trump's preference for simple, marketable agreements by American pay tariffs clashes with the complex, interdependent reality of U.S.-Canada trade. Prime Minister Mark Carney's government has responded with strategic patience. Refusing to rush into unfavorable terms, Ottawa has managed expectations, absorbed initial sectoral impacts, prepared for potential August 1st tariffs. Trump's public dismissal of Canada, stating talks weren't a priority, paradoxically strengthened Ottawa's position. His impatience exposed divisions within the U.S. administration and validated Canada's narrative, no deal is better than a bad deal. It also shifted blame for potential collapse onto Washington. Looking ahead, Canada is eyeing the 2026 USMCA review as a more viable forum for renegotiation, while developing alternative economic partnerships. Ontario Premier Doug Ford amplified this shift by openly suggesting deeper trade with China if U.S. uncertainty persists. Though Canada remains wary of Chinese competition in sectors like EVs, Ford's remarks signaled a broader recalibration. Already, Canadian industries are diversifying suppliers. Breweries now source aluminum from China over tariff-acted U.S. sources and aligning exports to strict USMCA rules. A full pivot to China remains unlikely near-term. But the threat underscores a strategic reality. Trump's tariffs risk pushing Canada toward U.S. rivals, jeopardizing $349 billion in annual American exports and ceding influence in North America. The standoff reveals a fundamental tension. Trump's transactional approach demands quick wins. But Canada's calculated restraint, tendering short-term pain to protect long-term interests, may ultimately redefine the continent's economic balance. As the deadline looms, waiting has become Ottawa's boldest gambit.